This is the Money Seed Podcast, where we discuss all things investing, plain and simple, the way it should be. Please remember, this show is for educational and entertainment purposes only and is not intended to be investment advice. Welcome back to the Money Seed Podcast. I'm thrilled to have Mr. Zachary Daniel. Zachary is an investment advisor, a crypto expert with a background in nuclear medicine, and a part-time alligator wrestler. Zachary, welcome to the show.
Hey, Gabe, thanks for having me. And retired alligator wrestler.
You know what? I know that that's probably the number one thing the listeners will want to hear about now is that alligator story. So let's get that out of the way. Tell us how you got into wrestling alligators.
Yeah, well, I generally am a risk taker as a person, calculated risk. And me and a couple buddies were going to Colorado for a trip. We wanted to look up for some extra things to do. And searching Colorado, sure enough, there's like an alligator farm with, a class on alligator wrestling. There was like no information. It was just like $100 alligator wrestling class. And I'm like, we got to try this. This just sounds crazy. And my buddy's like, dude, they probably got the gator's teeth pulled. They probably got like 2-foot gators. They're not going to let people actually wrestle real gators. That's crazy. I mean, how could they ensure that? So, but we took the trip. We went down there, and they start you off really small on the gators, and it's kind of crazy that alligators are just pure muscle. Just pure muscle. Even the small ones, you're holding on, for dear life. But it was interesting. He was teaching us the technique about, how you wrestle, quote unquote, alligators. And a lot of it came from Steve Irwin about where to put your hands, where they're vulnerable, how they don't tilt their head necessarily when they're biting, have good neck muscles. So that's why you're able to go necessarily into the swamp. And as long as you have your legs vertical, if they try to bite you, it'll mostly just graze your foot because their neck muscles are more restricted. So there's a whole bunch of things about Steve Irwin. And we kind of graduated from small gators to the bigger gators. And, it was just wild doing it. You see Steve Irwin do it on TV, and then you're here in real life. And they had like fingers from like last year's, people lose limbs. But it was really escalated when we got to the last pit, where the guy who was teaching us, which he had like a torn meniscus, this straight wild guy who lives it. He was like, like less than 1% of the people go to this next pit, but you guys are showing some aptitude, so you're willing to go. And it was like, me and my friend looked at each other, and neither of us wanted to be the one to back down. Neither of us wanted to be, bring it on. Neither of us wanted to be the one to back out. So, we went to the big pit, and these things are 10, 12 feet, 200 pounds, and we trudged around in the swamp for for about an hour, trying to feel for the gators, and then eventually, basically kind of hop on their back. You kind of have to position your legs in between their tail and then hop on their back. And you can't see any of it because they're below murky water, but you kind of got to feel with your body, and then you just jump and just ride them on the back of their neck till hopefully they run out of energy. You can rope them up and bring them to shore. But yeah, no, the gator wrestling, once in a lifetime thing. I know the guy invited us back for like their annual festival where they kind of do a competition, but no, that was enough adrenaline for me. I'm not that. Don't tempt fate twice, as I like to do it.
That's wild. I love how you said calculated risk. Yeah, I mean, I'm gonna wrestle a 200-pound alligator. Calculated risk. It's all good. What could go wrong, right?
Yeah, if I lose a finger, at least I got a great story out of it. So.
Sure. Yeah. Okay. I'll go with that. All right. So Zachary, moving on to crypto. So you have a very interesting story about how you got into crypto. Like I got into crypto about 2.5 years ago, and my story is quite boring. I heard a lot about crypto. I got into it a little bit too late, but not that late. I just went on Coinbase, opened an account, and bought some crypto, and I still have it today. It's doing well. But you have quite a different story. How did you get into it?
Yeah. I guess when I first heard about Bitcoin and got my first Bitcoin was probably 2014. But just a really small amount. And I was a college kid, early college kid. And then really when I started getting into it was 2017, 2016, 2017. That's when I started to, and as a college kid, it was mostly just pure speculation for the first 6 months or so. Then I kind of really got into it, the ethos, what the technology was, and then, it was a black hole from there. But
And were you mining yourself at this point?
I was mining. Basically, I started mining in the the mining story is interesting. I started mining in the crypto winter of 2018. So prices were about 3,500. You get an S9 on eBay for like $40. I mean, people were just trying to give them away. But I had an interesting situation. I was an intern and I had no income and I was living in public housing. Well, public housing was all utilities included $50. And so, including electricity. And I actually asked the floor manager, I'm like, are these apartments metered separately or is this like a floor by floor thing? And he's like, oh, floor. So I'm like, I could run as much electricity as I wanted. And, so that's what I did. I ran a couple miners in my room. I built like soundproof boxes and it took a while to get used to that sound. The decibel level for an S9 is like 90. So even with the noise canceling box, it was tough, but no, that was when I was mining, and I ended up donating back to the public housing after I was all done and financially, well off because they really did help me when I needed it. But I also at that time started a Bitcoin ATM company with a friend, and originally I'd never been in any business. I was going to school for nuclear medicine, so healthcare related, and he was just like, we want to get people access to Bitcoin in the area that they don't have to go through an exchange, or what if they want it instantly and don't want to wait for the deposit to clear, or et cetera, et cetera. And he's like, I think we can do this and at least make our money back. You know, he was just looking at it as a utility for the community because there was no Bitcoin ATM for like 50, 60 miles. And so we started this up, and it was a tough start because we couldn't get banking. We probably went through I at one point took off and probably went to like 30, 40 banks. And we eventually got a couple to work with us. Got dropped by a couple different banks, but, and then, just going door to door to stores, hey, you want to have this Bitcoin ATM in your place? And they're like, no. We're like, we'll pay you to have it there. You don't have to do anything. No. So, but eventually it all kind of worked out, and, it was a wild ride, but
yeah, I got a bunch of questions there. So when you say that the stores didn't want it, is it just because like they weren't sure about Bitcoin, or they weren't sure if it was legal, or what was the hesitation there?
Yeah, a lot of them were just, I have my business, it's going well. I don't want to introduce anything into it, kind of a status quo bias. I don't want to introduce anything to it that might upset it. I don't know you. Yeah, you're going to be paying me. I think we offered to pay like 20% of the proceeds, and then like a monthly, 100 or $200 a month just to be there. And they didn't have any risk then, and some of it was, in association with seedy actors. They're like, I don't want seedy people coming into my establishment, or, they were worried about the law. They're like, well, what if someone scams someone off the ATM? I don't want to have to deal with this headache. And some of those are valid. There were times where people got scammed at the ATM. They sent money to someone who convinced them. One of the more notable ones I remember is I got a call from the La Crosse Police Department, and they were asking about an ATM transaction. One of the students got called by a Middle Eastern guy pretending to be a warrant, or like a warrant was out for their arrest for the FBI. And if they didn't pay money through the Bitcoin ATM to this address, they were going to get arrested. And it was like, I'm sorry. If you're going to fall for that, I can't help you. I ended up refunding her money. She only lost like $300-400 because, I want people to have a good impression of the space. That's important to me. So, but yeah, fear is a powerful thing. When people are really afraid, they can't use the critical thinking part of their brain.
Correct. Yeah, exactly.
It turns off. It turns off. So
it turns off. Yeah, you got fight or flight, and like fear is, I think, is probably the most, like, the strongest emotion. Right, is the one that like it's really hard to override. Yeah.
Yeah, and so I get it. All they heard was FBI and fear, and it just everything else, secondary. So, but the ATM, yeah, it was tough to get into a store, but we got into a store and it was tough dealing with banks because it's a cash business and the Bitcoin part. But we eventually did. I bought out my partner after a few months because it was just kind of too much for him. We had just lost our second bank, and he was spending all this time, and he had a new family. So, but I carried it, and we probably grew that revenue stream from. I think our first month was 3,000, and I remember first time we got a transaction at $50. I was like over the moon. I was like, oh my gosh, people are using this. This is incredible. This is everything I ever dreamed of. And we grew it from about 3,000 the first month to the last month we were operational. I think we did about 250,000 in cash at a couple locations, and
Yeah.
so it was a wild ride.
That's incredible. I mean, I love entrepreneur stories and people starting their businesses. It's always a good story, but I guess maybe if you could walk us through the basic financials of how did you start the business, right? Like registering the business, where did you get the ATMs? How much the ATMs cost? How much, like, how did it all work?
Yeah. So registered the LLC in La Crosse or Wisconsin where we had the ATMs. We basically kind of my partner put together, because he was in compliance, put together kind of anti-money laundering KYC policy for the business, so that we could show banks that we're trying to be compliant. We are basically trying to let people buy Bitcoin as anonymously as possible being responsible in doing so. So we put limits on the ATMs as far as how much money could be bought anonymously strictly versus if you had to give us a phone number and we took a picture, et cetera, just to make sure no one's using the ATM over and over suspiciously, kind of money laundering type of or illegal activity type of thing. I'm generally a person, people should be able to do what they want with their money without everyone sticking in, but there's a give and take in the industry, right? And then we bought the ATMs. So there's several Bitcoin ATM manufacturers. The one that we went with was called General Bytes, and they're based out of the Czech Republic. And we bought their base model, which at the time was maybe like $2,500. We ended up buying also their more advanced model where you could buy and sell, because ours was just one way, and that was like $6,500. So it shipped from the Czech Republic to La Crosse, Wisconsin, and General Bytes was really helpful in that they had their own kind of interface to deal with the ATM. So there wasn't as much technical know-how as I was worried about, because I'm not a coder. My partner had some technical expertise, and he set up a server and dealt with the API keys and stuff like that. So technically speaking, anyone could do it, right? You don't have to be a coder or something. Anyone could manage learning that. But yeah, that was the kind of process, and then it was kind of about the banking. So that was the real part. Kind of towards the beginning, we used a lot of personal accounts. So the upfront capital I had to start the business, it wasn't overall too much. I was basically broke. I was an unpaid intern doing nuclear medicine, and he was a new father of three. So, and the only working one at his house. So we both combined probably could only put together a couple grand.
Yeah. So if I could just interrupt you, it sounds like it's a great business idea, because it sounds like you don't need a lot of startup capital, right? You just buy the machine for $2,500, a couple $100 for the LLC registration. Maybe you do some, like you said, some low level coding to get it set up. Find a place, a store you put in, and it sounds like this is a business where you don't need cash to start the business, because people just kind of put cash in the machine, right? Like they just keep putting cash in the machine, and then I imagine you took a certain percentage cut and maybe a service fee, and that was your revenue model.
Exactly. It wasn't that expensive a business to start. We probably had overall, I ended up having to borrow from a personal loan, and he borrowed from his dad, because no one really wanted to invest. And we had one investor that was really interested, but he wanted a huge proportion of the equity in the company. And we're like, you don't have to do anything to put up like $5,000. It's not worth 60% equity. Like we want to feel like we're, so got it all started. I would say all combined for about $6,000 to $8,000. And then we had maybe half a Bitcoin in the ATM at any one time to start. So we this was the hardest part is when it started going, we had no Bitcoin to like sell at points. We were running out of Bitcoin constantly because, basically you run to the ATM when you deposit cash in the bank, and then it can take some time to either do an ACH transfer or a wire transfer. And wire transfers start adding up if you aren't doing larger amounts. And it was like, I mean, we were just running back and forth from this ATM to put in cash because we didn't have, that much. And we charged 8.5%. I would say our costs between buying the Bitcoin, sending the money, and just maintaining it was probably 1.5 to 2%. So you're taking about 6.5% spread off the sale of the Bitcoin. I was hedging it with derivatives, basically so that if the Bitcoin price went up a ton, we weren't losing out on, I was hedging our position. So it was strictly that. And then, I was paying the place maybe $100 to $200 a month to host it there. And, the amount of capital that it required to maintain was super low. So it was a great business. And the space has changed. So there's a lot of more large players. There's a lot more ATMs out there. So I think if you're going to do it today, the opportunity isn't quite as ripe, but I still think it's an easy business to do. I kept, even when I wound down the business, I kept one of the ATMs and I put it in a friend's shop, and we can just have it sitting there. It makes a few $100 a month, but it doesn't require any maintenance, and it's good.
Yeah, I like it. Yeah, that's a great story. Very low risk to start, very low capital, and the sky's the limit. One last question about the business is, this is 2016, 2017. How did you hedge it? I mean, this is before you had Bitcoin ETFs. What kind of hedge did you use?
Yeah, so I was 2018. I was using at the time Bybit or Bittrex or BitMEX, basically kind of an offshore, futures or derivative exchange, and you can use leverage. So, say I was, and you have to use a VPN, so they don't allow you as customers. So, part of part of what I like about Bitcoin and crypto is you can get access to certain financial tools that just can't as a normal person in the United States. There's such restriction. So we had, because we started to accumulate more and more Bitcoin. Say we had 30,000 Bitcoin on hand. I would, go on the exchange. I'd probably do, probably 5 or 10x, kind of short, 5 or 10x leverage, short contract, or short futures contract on that Bitcoin. And then, depending on how fast we sold that Bitcoin, I would kind of unwind the position. So if Bitcoin went up, there is a funding fee for, using that kind of hedging. So I just kind of accounted for that in the overall spread, and never got too absorbent. During the top of the bull run, this last 2021, the funding for on the futures and derivative exchanges was crazy. I mean, so in that sense, I probably would have been, if I was still running the business then, it would have been tough to justify some of the hedging, and I would probably have been at risk, just for price fluctuations in Bitcoin. And that's just part of the game, I guess.
Very cool. And do you guys ever run into any security issues? I imagine people who have ATM businesses, quite often there's a lot of cash involved. Did you have any crazy stories with that? I mean, people walk around with $10,000, $20,000 in the backpack. I mean, all kinds of things can go wrong.
Yeah, no, there was, and I don't know how long this podcast is going to be, but we could really get into a couple issues that I don't know. You want me to get into?
Just tell us one good story, and then we'll move on to other stuff. Yeah.
Okay. Yeah, we could go down a rabbit hole with a few kind of crazy things, but I'll say one. I moved out to Oregon, and I was still operating the ATMs. I didn't have any of my friends still in the area. My partner had just moved away, so I had no one to do the cash. So I was hiring my dad to do these weekend trips to the ATMs. And one time I think I allowed $120,000 to accumulate in the ATMs. So my dad was going there, unarmed, taking out $120,000 out of the ATMs and driving and depositing in the bank. And the bank gave him a really hard time depositing $120K in cash. you know, they, that was, but yeah, I was having my dad run around. I remember I hired a couple friends who, they were carrying around 35,000 between them to the bank. And, the problem was, and this is a risk management issue that I knew was a problem, but I had no idea how to solve. I tried with, the armored trucks, but it just wasn't going to make sense financially. My friend could essentially say, "Hey, I got robbed. Pocket 30K." And, what's my recourse? Do I say, "No, you didn't"?
Yeah.
So that, I was my first business. I would say some of the lessons where I didn't build it. I didn't build it for that kind of growth. So there were a lot of things that I just wasn't prepared for. And as the business grew, a lot of those growing pains kind of showed up.
Yeah. And I hear that from some other individuals in this space that like banks, ironically, don't like it when you show up to deposit a lot of money in cash. You would think the bank would be overjoyed, but that's not the case. No.
Yeah, yeah, it's funny. It's ironic. It's
Cool.
true.
So Zachary, you are a certified investment advisor. When someone comes to you, when you have a new client and they want to talk about, hey, should I put my money in stocks, real estate, 401k, crypto, this and that? What is your typical guidance toward what percentage of someone's portfolio do you think should be crypto?
Yeah, that's a good question. A lot of it depends on obviously their age and risk tolerance. Um, I think that there should be at least 1% allocation to digital assets, almost regardless of age or retirement policy. Because even if you are close to retirement, um, I think the risk reward for the allocating towards Bitcoin is disproportional to losing. You might lose 1%, but there's an opportunity for that to become 2, 3, 4, 5% of your portfolio and make a difference for your retirement outcome, and then something you might be able to pass down to your kids. So I think that should be a part of everyone's portfolio. Now, uh, I caveat that because you can't say everyone. It's not suitable for absolutely everyone because there is a strong degree of risk and volatility. An asset that's gone up, it's fallen 90% for
Yep.
3, 4 times. A lot of people can't stomach that. And yeah, the trajectory has been up, but it's emotional. It's your money, so you got to find for a lot of clients, you got to find a place where that whatever amount of money you decide to allocate towards it is not going to elicit an emotional response, no matter what the pricing is. And that's different for everyone. For a young person who has a really long time horizon, that might be 5% of their portfolio. For a person that's at or near retirement, that might be 0.5% or 1%. They just want a little taste and something that's, obviously last year a lot of assets were correlated because almost everything went down except energy stocks, but generally uncorrelated and just a kind of differentiated asset class and almost anything out there. So it is a tough conversation. It's a lot on an individual basis, but I think it's a good part of anyone's portfolio, really.
Yeah, and I'm glad you brought that up about the volatility because that's a story that's often not really talked about. Is it's not only Bitcoin, but any kind of asset. If you want really big gains, you have to put up with big volatility. You can't have big gains
Exactly.
without the volatility. And people often hear these stories about how, oh, if you would have bought Amazon in the year 1998 and you would have held it for 20 years, you would have like 5,000 extra money. But it's like,
Yeah.
yes, but there were some years when Amazon was down 50% in one year or 60% in
Hmm.
one year, right? And you only made that 5,000x over 25 years if you like really rode out those tough years. Because yeah, there were years when people lost half their money on Amazon. It's like, no, just write it out because the big volatility and the big gains go together.
Yes, yeah, absolutely. You can't. That was perfectly said. You can't have large gains without large volatility. And a lot of people that say that are the same people that would have sold, or had Amazon gone up 2x or 3x, they would have been like, okay, look at this gain, I'm out. And then they would have watched it ride up another 10x because some of it is just not a belief in the asset or not enough kind of due diligence, and there's some degree of luck, like hindsight bias, to think that Amazon was going to become what it is today. Back in 1998, you could see that was a possibility, but was that as strong as a probability as people probably think it is in hindsight? Probably not. So yeah, no, it's it's interesting. I like the volatility as as an investment advisor. You know, a volatility is opportunity in some regards. Of course, risk but that's
Yeah. But I agree with you. It's not for everybody. I mean, you wrestle alligators, right? And but no, it's funny because I trade options on the side, and I got into options trading about 2 years ago. And I'm a volatility seller, so I sell options.
Okay, so you sell. I was going to say you basically sell the options.
And I'm a big fan of Tom Sosnoff and the Taste of Trade method. And it's all about selling the volatility. He the more the volatility, the better. Just sell it, and
yes.
Yeah, and it's been working well for me. It's been all right.
Yeah, I think it's really great, especially if it's like if you have a long-term position that you're confident in, you can just sell the volatility on calls, sell the calls, and if it goes up and you have to sell it, oh well, you still made a profit, and otherwise you keep the income. So yeah, I agree. So you must have liked last year with some of the. Did you do any of the meme stocks or?
I did. I lost some money, and you know what? I learned my lesson. Right, that's something you live and learn. I lost some money, like things like Peloton and Snap. I think those were two that really just they were painful. But some of the other ones were okay. So yeah. I did. I got caught up in the meme stocks, and hey, it's you live and learn.
Yeah, we all indeed.
So let's get back to crypto a little bit, Zachary. FTX almost 2 months ago to the day. FTX had its moment. How has that changed the industry? What do you think are some of the takeaways, and how has that impacted what you do?
No, it's definitely changed the industry. I think overall it set it back. I think that Bitcoin and I guess I like to say Bitcoin and crypto synonymously sometimes, but Bitcoin's its own. I would say its own separate thing, and the whole rest of the crypto industry is something else. So I think it set the whole space back. There was a lot of momentum as far as institutional adoption, products, on ramps, celebrities, politicians, funds getting involved, and it just rug pulled all that. And because part of what made FTX so kind of painful or visceral was, with the other crypto collapses, Celsius, Voyager, etc., it was mostly contained to, themselves. It wasn't necessarily in the more traditional financial markets where FTX was raising funds from some of the most prestigious and well-known venture capital firms, well-known celebrities, Tom Brady, Steph Curry, had investment from big players, including, necessarily more conservative institutions like the Canadian Teachers Pensions Fund. It had politician ties. There was just a lot that when FTX collapsed and was exposed as badly of fraud as it was, I think that hurts the space optic-wise. We're definitely going to see some regulatory fallout. I don't know exactly what that's going to be yet. The regulators have made it pretty clear on where they stand with Bitcoin, but the rest of the space is fully open to anything else. It hurts. It's kind of crazy how bad FTX kind of overall was. The space will recover, but it's going to take time. I think the only positive thing that's come out of this is a higher skepticism to any firm operating in the crypto space, as far as if it's not your keys, not your coin, kind of thing. I think during the bubble it got pretty blasé, and I think there's going to be a new kind of ingrained affinity for taking personal responsibility, not just trusting your counterparty, because that was one of the things that crypto and Bitcoin enabled for you to happen, not to trust a counterparty. And so I think that that's probably one of the only good things to come out of this whole thing. And I guess something else was some of the crypto decentralized lending platforms, such as Compound or such as Compound, when those counterparties had loans with them, they got paid back. So a lot of the decentralized lending was interesting to watch. Celsius is basically halting withdrawals on customer funds. They're defaulting on all their loans, but they'll pay back the compound loan because it's over collateralized and back, smart contracts. So you're not getting the collateral back if you don't pay back the loan. So, all this is going to be fought over in bankruptcy court for years over different jurisdictions and all this headache. On decentralized lending, it got paid back.
Interesting. Yeah.
So
Yeah.
that was one interesting thing that I noticed is all the loans that was, were through smart and that's so, but overall, the FTX part was really tough for the space and definitely set it back institutional wise, adoption wise, reputation wise.
What are your thoughts on Binance? You think Binance is on solid footing?
That's a good question. I think that Binance is not they don't have what they aren't fully backed. I would say that they aren't on strong footing overall. Now they're an entrenched player. They took huge losses from everything that's happened in the space. They say they don't loan out funds, but they had a lot of alt tokens and things, Luna, FTT token that they on paper lost billions. Now, where Binance I think has a leg up for everyone else is they have somewhat of a piggy bank in the Binance token. It would be, in my opinion, Binance would have had to have gross mismanagement and fraud to kind of squander away the position they were in, because they basically raised a token that had a $50-70 billion valuation. They were the biggest player in town, getting all the fees generated. It would be tough for me to see them collapsing, but I wouldn't trust them. I had used Binance in the past because they have an interesting suite of products that are unavailable anywhere else. But I wouldn't trust them. Do I think they're going to collapse? No. But are they transparent? No. they are involved in some shady things. They haven't had a really strong CFO for years. It's basically CZ, who's the head of Binance, and he's the ringmaster. So he has different pockets of people that know different things, and no one can probably put everything together. It's a black box. So no, I don't think it's going to collapse, but it's.
Yeah,
I wouldn't touch it.
I hear you. So quick question. So let's say somebody wants to buy crypto for the first time, right? And it's kind of a conundrum, right? Because on the one hand, the beauty of crypto is that you really don't need to go through a third party like an institution or a bank. You can just create your own wallet and start transacting. On the other hand, how easy is it to create one of those wallets by yourself? Like, I've never done it. Like, I only bought my crypto a few years back through Coinbase, but like, how do you what is the advice you give to somebody if they say, I want to get into crypto, I've never done it before, how should I go about it?
Yeah. Oh, it's a good question. I mean, I guess I would start with, are you just trying to buy and hold it, or what? But it's really easy to get a software wallet. So that's the wallet that you get on your phone or something. There's lots of apps that have, you can just go to the App Store and there's a bunch of good Bitcoin
and
software
any particular
wallets.
app you recommend?
I like Moon. So MUUN. I like Samurai Wallet. I like, if you want to hold a bunch of altcoins, the Exodus Wallet. Those are some good ones to start. And Moon, I like especially because it also enables Lightning transactions, which if we talk about Bitcoin more, I love the Lightning Network. And I think that's something that is kind of overlooked in Bitcoin and not many people really know about, but it's exciting. It's really exciting. So I'll touch.
I've never heard about it. Yeah, maybe give us a quick intro.
Yeah, I'll touch on the Lightning Network in a second, but it's very easy to take possession of your own tokens. And basically, you'll have your seed phrase or your 12-word phrase, kind of to access your wallet or your backup. But and those software wallets, I would say, are generally very secure. I don't keep more than I don't keep a ton of Bitcoin in there all the time because you never know. But I personally have never had anyone had their Bitcoin compromised in a software wallet other than their own negligence. giving their seed phrase out to someone, or letting them have access to their wallet, like on their phone, stuff like that. Um, I like taking possession of my Bitcoin because I don't keep all of it myself. I have some on exchanges, but it's a freedom thing for me. If everything was to go down, I have no counterparty to deal with,
Mm-hmm.
and it's nice because I try to pay with Bitcoin wherever I can, and so it's really nice to have it on a software wallet to just kind of do that quickly. People don't need to do that, but I do recommend it. And some people talk about cold storage, so that's the technically safest way to hold your Bitcoin, offline, in cold storage with like a hardware wallet. But it's a little bit more cumbersome, and I think for most people that's not necessary. I think that's for people who put a significant chunk of their wealth into Bitcoin and want to keep it away. And some of it is incentive not to put it on exchange and sell it. They're just like putting it away, and so it depends how much Bitcoin you want to hold. If you just want to hold a really small amount, get on an exchange. Any of the U.S. exchanges are very solid for that. If you want to take possession and kind of try to use it, download the software wallet. And if you want to hold really large amounts, it's best that you learn about cold storage and kind of go that way. But okay, let's talk about the Lightning Network quick.
Yeah.
So I went down to El Salvador February last year to kind of check on the ground what was going on with the Bitcoin adoption and everything. And I really wanted to see how Lightning Network was working. So Lightning Network is, I would describe it as kind of a layer 2 protocol on top of the Bitcoin network that utilizes some of the security apparatus of Bitcoin, but kind of works like, I would say it kind of works like a long bar tab, to where there's a lot of Lightning transactions that get sent in between parties, kind of an escrow, and then they get settled on chain. Hundreds of transactions or thousands kind of get settled on chain. So there's a lot of transactions happening on the layer 2, but only get settled, once on the layer 1.
Mm-hmm.
Because, on the layer 1, Bitcoin is generally a slow blockchain. And a lot of people will say that's a bad feature, that's a bug. You can't have speed and decentralization and security all, it's like a triangle. So if you want a ton of speed, you're going to compromise on decentralization and security. And so Bitcoin, if you're going to build the base layer of internet money, if you're going to build the base layer of sending value over the entire world, you need security at number 1 and decentralization at number 1. And so, it sacrificed some speed. So on-chain transactions, you can't really use to buy a cup of coffee. It can cost between a cent and, if the fees are really high, maybe $1. But on the Lightning, it's basically free. So I've sent like 2-penny transactions over the country, and it goes through, and it's instant and it's quick. And so when I went down to El Salvador, I wanted to, they had to use Lightning because, a pupusa is like $1 US. Well, there's no way you're using on-chain Bitcoin. Plus, the confirmation takes about 10 minutes for the block to confirm.
Right.
Yeah, it might show up and say it's arrived in your wallet, but to confirm the block, it takes about 10 minutes. Lightning confirms instantly. It's fast. It's quick. It was incredible to use it. And so Lightning Network continues to grow. That's probably where the most development in the Bitcoin space is. And it's one of the most exciting things I think that Bitcoin can offer, because finally it's becoming something that could scale to a global sphere, and with low transaction costs. And when I was down in El Salvador, a lot of those vendors don't use credit card. One, because of the fees, and 2, because it takes a long time to settlement. If you send your credit card, they're probably getting paid for it, month, maybe even more later.
That's right.
So it's either cash or Bitcoin. For Bitcoin's instant settlement, there's no middleman. It was basically free.
Yeah.
Transaction
that's really cool. Yeah. If I could just interrupt, I just want to say that's really cool that you actually went down to El Salvador. So just to clarify for listeners, so El Salvador made Bitcoin legal tender, I think a year or 2 ago, right? So now you can, I guess they have their normal currency. You can probably use US dollar cash, and you can also use Bitcoin. And I think they were one of the first countries to adopt Bitcoin as legal tender, right? So I'm assuming that means people can pay their income tax with Bitcoin, or people can really do all kinds of stuff with it. How is the adoption going? Like, how many of the vendors accept Bitcoin? How many of the stores, et cetera?
No, that's a good question. So obviously El Salvador, like 10 years ago, was one of the most dangerous countries in the world. or 15 years ago, most dangerous countries. The adoption it's mixed. So, you're dealing with a population that's been impoverished and in war for the last multiple decades. And now you're trying to bring them in the 21st century by introducing Bitcoin very quickly to a population that really didn't know much about it before. And there were pockets of, part of the reason it caught on in El Salvador was Bitcoin Beach and there were pockets, local economies that basically started using Bitcoin as their local currency. And so that kind of caught the attention, among other things. But in those pockets, it's strong. I went down to the heart of Bitcoin in El Salvador, Bitcoin Beach, and I was using Bitcoin for about 50% of my transactions. Knowledge about Bitcoin there is generally pretty good, and yeah, adoption's pretty decent. Now, if you go to the different parts of the country, like I went to the capital, I only used for maybe a couple transactions, and adoption wasn't as strong there. And I think a lot of it has to do with education takes time, and this is a population that unless it's extremely useful for them right in the moment, they're not going to adopt it, right? So I think adoption in that country is going to accelerate when the Bitcoin price increases, or when more people there just kind of demand as a payment vector. The government did a program where they basically gave each citizen $30 US equivalent of Bitcoin, and most people just went to the ATM, withdrew it, sold the Bitcoin back, and took the $30 because $30 for them was maybe a month's wage, 3 weeks wage. So it's the adoption's mixed. I see what the president's trying to do, and I think he's going about it in the right way. I know people are saying like, well, it's irresponsible to put Bitcoin on their national balance sheet, but if you look at the proportion of Bitcoin compared to other assets, it's like 1%. So yeah, they're adopting Bitcoin, but it's slowly and kind of in a mature fashion that I think over the next few years is really going to pay off for the citizens, and it really has already paid off. Some of it was probably a little bit PR campaign, but tourism is up. The president put a really strong crackdown on crime. It used to be one of the highest, crime cities in the country, and they've had 0 homicides many days last year. So the country's on the up and up. I went there, and I never felt in danger at all. I was walking around at night, and to see that happen from 12 years ago, people were getting murdered with machetes. It's really impressive. So yeah, it's adoption. You'll hear news articles about how Bitcoin's failed in El Salvador, or no one's using Bitcoin in El Salvador. And I'm here to tell you that most of that's false. Now, it's not rainbows and sunshine. It's not like the whole economy is running on Bitcoin, but it's happening, and it's real. So I was on the ground, and I was there. So
yeah, that's encouraging. That's actually really cool to hear. And it sounds like the Lightning network that you described solves a lot of problems with Bitcoin, right? So it makes the transactions quick. It makes them very low cost. So I think that already solves a lot of the problems right there. So
yeah, when you hear like, well, if anyone comes at you and say Bitcoin's slow, obsolete, listen to this blockchain, it can do 2 million transactions per second. You can kind of dismiss them as like, okay, you don't really know what you're talking about, because you're kind of falling into whatever marketing gimmick. This is the next Bitcoin because it can go so fast. Right, and I'm like, you look at the security features of it, and it's basically non-existent. It's basically centralized, and who cares about how many transactions you can do per second compared to Bitcoin, because Bitcoin with the Lightning Network can scale infinitely. So yeah,
incredible. So obviously you are a Bitcoin enthusiast. What is your outlook on Bitcoin? I mean, right now it's around $18,000, give or take, per Bitcoin. What do you think it's going to do over the next couple of years?
Yeah, I kind of got to be careful about about what I say being an investment advisor. So this is not financial advice, but I think Bitcoin is going to be very strong over the next few years. I don't know how long it's gonna take for the price to reflect that, but the network's never been stronger from a security standpoint. The hash rate just hit an all-time high. The number of wallets that hold more than one Bitcoin is an all-time high and climbing. The number of wallets that contain 0.01 Bitcoin, all-time high, climbing. There's continuing adoption. The proportion held by the largest players continues to decline. So kind of the opposite of our entire financial system. For the last 40 years, the 1%'s got richer. And for the past 13 years, the 1% Bitcoins got poorer. So,
which is good. That means it's getting more liquid.
Yeah. Exactly. More liquid. There's more adoption. The number of apps or institutions that's integrated with Venmo, Cash App. Cash App's really great because it's not, they also do Lightning transactions. So you can, I've done Lightning transactions off my Cash App. So that's also a really good way to, if someone has Cash App, and Cash App's a good app. Cash App, Robinhood, SoFi, like all these platforms have started to integrate with it, and we're just scraping the surface. So, like I said, FTX pushed things back, but and something interesting that's unique to Bitcoin that I've never seen in any asset ever. The kind of, and you might call it cultish, it is partially cultist, but a little bit of cultish belief. There's a decent proportion of Bitcoin people that just believe in the asset, and they don't really care about necessarily the price. They care about the utility of it. The fact that I can send it anywhere, that it's mine and no one can touch it, and it's outside the purview of governmental control necessarily. And that to them is the most valuable part. They don't really care about the price. Yeah, it might go up to 30,000, might go down to 3,000, but they're gonna accumulate the asset at any price and kind of refuse to sell it unless it's exorbitantly higher. And I don't think there's another asset out there that has such a strong core group that holds it, which is really unique. And for people that, even for the most skeptical people, right? Even for the people that say, well, Bitcoin's tech is useless, it has no use case, no one wants to, whatever their gripe is, they'll still come back to, well, there are millions of people out there that continue to buy it every single day and refuse to sell it. And when you have a fixed supply of that said asset, math, you can do math yourself about what happens. But when you have everything underlying it about the growth and about the security and about the implications of technology, now you start to really build a case to where, yeah, there's a lot of short-term volatility, but the future years are very, very bright, in my opinion. I can't say the same for everything else in the industry. I think Bitcoin is one of a kind, and we can go into why I think that versus everything else. I think a lot of everything else is probably going to zero, just like it has been for the last 5 or 6 years. A lot of these coins are hype projects, marketing schemes, VC dumps, rug pulls, false promises, bad teams, you name it. And most of those are going to go to zero. There are some things in the crypto space I think show some promise. I know everyone hates NFTs, and I know there's some people right now rolling their eyes. They're like, oh, this dude's going to go into NFTs. I can't trust the word he said. I'm here to say that they're not going away. I think the NFT space has shown some of the worst qualities of the entire crypto sphere as far as grifting and useless things. But I think underlying it all there is some promise there, both from there's from the gaming side, from the membership and club side, from the high-end art side, that NFTs aren't going away. There's a really strong entrenched community, and there's really strong incentives for it to succeed when you capitalize it the right way. So we'll see. I mean, we could see it a little bit from the Donald Trump NFT that just came out. It sold out in a few minutes, and part of it wasn't the NFT; it was the utility. Well, if you own a Trump NFT, you have a chance to go to dinner or golf with him. That wasn't about the picture; it was about what it got you access to. A symbol of your undying loyalty to the big Trump guy, and also a chance to kind of get some perks or rewards. And I see that as an area that NFTs can kind of thrive in, to where there isn't as much middleman. I don't know how Trump would have done that outside of the NFT space. It would have been tough, and NFTs were I do think there's some campaign finance implications of that. because anyone could really access that. Someone in Africa could have basically
Right.
bought the Trump NFT, and technically if it was an official campaign, he could be financing that campaign. There's a lot of campaign finance things that are probably going to come up in the future, but so yeah, that I cautiously say that is a possible right spot. I know people are dismissing it, but
It's interesting, yeah. And to be honest with you, I've never really gotten into NFTs. I've never purchased one, although it's good to hear that you believe in it, that you think it's going to stick around. When you mentioned that other coins are kind of going to go away, or maybe they're not going to have a bright future, that there's one coin that's Ethereum that seems to be quite resilient. What are your thoughts on Ethereum?
yeah,
And to add to that question, sorry, Zach, is there are some people who believe that Ethereum will surpass Bitcoin in value, right? Obviously, today it's nowhere. I think Ethereum is like $1,500, give or take, for one Ethereum. Bitcoin is still at 18,000. But what are your thoughts on that?
Yeah, I'll start with the second part of the question before I go back to the first part. And the short of it is, it's not going to happen. I think Ethereum, the chance of Ethereum overtaking Bitcoin died when they went to proof of stake and stopped proof of work. That at the core changes the entire security apparatus of the platform. Proof of stake is basically whoever owns the Ethereum can dictate network rules. And I know it's not that simple, but Bitcoin's based on proof of work, and the security that it provides the network is unmatched. There's no computer network that has been larger than Bitcoin in the entire history of the world. The top 50 supercomputers combined wouldn't be able to break Bitcoin right now. So Ethereum going to proof of stake is a huge security downgrade as far as attacks on the network, because if you own enough of the validator nodes, and you can dictate where you can stop transactions, you can freeze wallets, you can freeze this, you can freeze that. And so for Ethereum to overtake Bitcoin and basically become the base layer of the digital finance infrastructure, it presents huge security implications, and it's just not congruent. You need that base layer to be as immutable, secure, decentralized as possible for everything to build on top of it. So Bitcoin was to go away and Ethereum was the only game in town, I would have serious reservations about trusting the space as a whole, because at the base layer, it can be compromised. That said, I don't think Ethereum's going anywhere. They have a lot of tokens. They have a lot of, I guess you could say, critical mass. They have a lot of tokens that have been issued using Ethereum. There's a lot of projects, NFTs or ICOs that use Ethereum. It has a lot of network effect, and it is useful. So I don't think it's going anywhere. I think this move to proof of stake, while probably the best kind of for Ethereum, really takes it out of the running as far as competing with Bitcoin. And they're not mutually exclusive. It's not like, some Bitcoin people will say, well, everything else in the space is complete junk. I think they have different uses. But this move has really distinguished Ethereum and really all of their projects as Bitcoin's there, and then there's everything else. So I think it was good for Ethereum to kind of go to proof of stake, but I do have some kind of security concerns and kind of logistical concerns. A lot of people locked up ETH2, 2.0 in staking. And now it's like the roadmap's MIA. It was like, oh, we're going to merge, and then we're going to unlock ETH2 at 6 months, a year later, and now the roadmap's pushed out another 6 months, another year. And so there's a decent amount of ETH just sitting locked up, unable to do anything, all based on the whims of the foundation and other large players. And right there again, the economic incentives don't, one of the great thing about Bitcoin is agnostic. There's no one that can dictate the economic incentives of Bitcoin is set in stone. But with Ethereum, now you have, the foundation or the people at top dictating what the economic parameters of the network are. Now they want to burn tokens. Now they want, disinflationary. It's like, it's subject to change, just like out of our current monetary system.
Exactly.
Well,
that's what I was going to say.
Jerome Powell Well, I think the price of money today, boys and girls, is we're going to raise it to four percentage. You know,
Yep.
400 basis points. It's like it's to the whims of our same financial system today. So hopefully that, yeah, I think that that about sums up my thoughts on Ethereum. I still like
Yeah.
Ethereum, but
No,
it's
I
not
think
going to do
I
the
think
thing.
that's a really good take. And to be honest with you, I personally hadn't really considered the security implications of going from proof of work to proof of stake. But I do think you raise valid points. I think there's the environmental side, right? Where when
Mm-hmm.
Ethereum went from proof of work to proof of stake, the energy usage of the Ethereum network dropped significantly.
Yes.
You know, something like the electricity use of a small country like Luxembourg got removed from the global electric grid. I know there's a lot of concern today about climate and that kind of energy use and that kind of thing. And I
Yeah.
always feel like that's something that maybe Bitcoin has to address. What would you say to somebody who raises that concern with Bitcoin?
Yeah, in some ways it's a fair concern. And I do, it was, you're right, the environmental impact from going proof of work to proof of stake, it was significantly reduced. And like I said, I think you have to have proof of work in Bitcoin. If you can't create security out of nothing, right? There has to be some input. And so for Bitcoin security is energy. So how much energy is it taking up? That's what's the security behind it. Of course, it's encapsulated in running the code and cryptography and the mining algorithm, but at the core, it's the energy. So I think that that Bitcoin takes up a lot of energy. It's securing whatever it is, 300 billion, 500 billion, $2 trillion worth of value, and so those security costs are high. Just like the world has a very high security for gold storage. You have buildings, you have concrete, you have guards, you have accounting, you have all this apparatus for gold storage or anything of value. For the US dollar, it's the military. You have, tanks and
Yeah.
warplanes and it. So
For
for big,
ATMs, it's armored cars or your
yeah,
dad's car.
exactly. And for Bitcoin, it's the energy of the network. Now I do think that Bitcoin's energy consumption is very high for renewable energy. Part of the great thing about Bitcoin is you can capture stranded energy. So one of the biggest issues with energy creation is you have to bring it from where it's created to where it's used. Where Bitcoin, it doesn't need people to operate. So you can take it, to the northern Siberia and run it. And so a lot of Bitcoin people are very creative about how they go about mining, to where they will to go to gas flare offs that are already flaring off gas. Well, how about I clean it and then I run Bitcoin mining equipment and then over the internet, so they're capturing sources of energy that would otherwise be wasted. One example is I was almost part of a project. I was really disappointed that didn't go through, but I was teaming up with a local brewery to basically, they were flaring off methane from, I was going to scrub it, clean it, and then burn it on site for Bitcoin mining. And, I would have been doing a net positive for the environmental factor, and I would have earned Bitcoin off of it. So there's a lot of different ways, and people are very creative because in Bitcoin mining, it's all about energy. How low can you get the cost? And typically, the lowest way is through renewable, through a creative renewable resource or stranded energy where you're paying an oil company 3 cents on the dollar for something they would have flared off for free. Um, so I think that's part of the environmental concern is it's not going to always be all renewable, but like today, I think if you eliminate all fossil fuels from Bitcoin mining, it would still run. It would run perfectly fine without a hiccup. That's one of the beautiful things. It's had 14 years of uptime uninterrupted. China, the year before, banned Bitcoin mining. 40% of the hash rate fell overnight, and Bitcoin was uninterrupted. Imagine if 40% of AWS went out. It would be
Oh my
pandemonium.
God.
If
Yeah.
40% of the Pentagon's computer infrastructure went out, it would be complete pandemonium. So it speaks to some of the resiliency of Bitcoin. And yeah, so the environmental factors are valid for some things, but the proportion of clean energy that's from Bitcoin mining and is very high. And how much of that energy that's clean is even a net positive is also kind of surprisingly high. So um, it's fair, but I think there has to be something, right? You can't create security out of nothing. I think that if you're going to build Bitcoin as the base layer of the, you know, base value layer, you need to be backed by something, and energy is a good thing to back it by, just like other things are, backed by different aspects. So
Excellent. Yeah. Zachary, one last thing before we wrap up the show. I want
yeah,
to congratulate.
it's been flying by fast. I start rambling on a subject and it just keeps
No,
going.
no, it's been great. Thanks very much. No, I want to talk about your book, and I want to congratulate you for finishing your book. I think almost every human being at some point in their life thinks, man, it'd be really cool if I wrote a book. And a lot of people think about it, but a lot of people start their book and never finish, etc. But you wrote a book. It is a work of fiction. You got it published. Maybe walk us a little bit through about the process. Did you use an editor? How did you get it published? Did you promote it? Tell us the whole story of start to finish.
Yeah. Yeah, so the book's out, Manifest Destiny. It's available on Amazon and everything else. But it kind of started in my college days. I got back from going out, and I had this idea for what I thought would be a good movie. It's kind of writing it down on my phone, and I was like, well, I can't really do a movie, but I can do a book, so I can at least bring it to life. That's kind of what the spark that kind of got me started on the book. And so I just started on it. I think that night I stayed up to like 4 a.m. just writing the first 50 pages just to make sure, like, okay, I have upfront investment. I'm serious about this. This is going to happen. And after that, I continued to work on it. Sometimes you kind of get creative juices and you'll go work on it for 3-4 months at a time, almost religiously. And then you'll just stop for 6 months because you just writer's block or something else gets in the way or some other interest. So I did that on and off for about 5 years. I probably wrote first draft, was finished like the first, probably after 2 years. But, I just kept going, editing, going back and forth because I never was super interested in writing. My friends or family would say I'm terrible at grammar and spelling. So, it was kind of some of me just like getting out and I was young, I still am young. So it was just part of me learning and getting better and better and better and getting the story better. And after about 5 years, I gave it to a couple of friends. They went through it, and I told them, be as harsh as possible. I want you to just hurt me, hurt me when editing this, because the worst part would be I get everything done and I release it to the world and it's bad. And that would reflect on the people I chose to edit it. So had them be very hard on it. Then I hired a freelance editor who went through it a few times. And then I looked at the publishing process because it was ready. I was ready to go. And it was basically either self-publish all myself, in which I had no guides about what to do or publishing experience or know anything about the book industry. And I didn't have a lot of time to offer that up. Or the other option, that main option, would be try to get a big publishing house, right? That's how most people think about what the publishing process is going to be like. Well, as a first-time author, young, no big social media audience or anything I could tap into, and no like references in the author space I would first have to get a literary agent, which would have been 6 to 9 months of hitting up hundreds of agents, try to get them to pick me up. And literary agents get hit with tens of thousands of submissions a year. So it would have been, I would get an agent, and then the agent would have to go to bat for me. And just because you get an agent doesn't mean that your book's going to get picked up or anything. So it was looking like, oh, this is going to be like a 2-year process, and the chances of me getting picked up by a big publishing house are pretty slim. So I found a hybrid approach with a publishing house that does everything like a traditional publishing house, but you're going to have to share in the cost of the publishing process. And I thought that was the best choice because from start to finish, I'm like, oh, it's going to be 9 months to a year. But I'm going to do the book justice. So I spent all this time, I spent thousands of hours. It's like, I want to give this book the best chance to succeed as possible. And I thought that was the route to go. So partner with the publishing house, they go through it. If they determine that it's.
And Zachary, sorry, what's the name of the publishing house?
Made for Success.
Made for Success. Got it.
Yeah, okay. It's based up in Seattle. And yeah, no, they did the cover, I have an audiobook. They gave me voice actors I could choose from. They went through my book and did all the editing again. Um, and they did a great job editing. Uh, they did all the Amazon, the search optimization, the keywords, the getting my author spear ready, um, getting the distribution ready as far as all the art and marketing and everything. They did a lot. So I think it was great. I was also very motivated to help them with the process. And it's a lot of upfront costs, and you split royalties. So I never expected when I publish my book that I'm going to make my money back. It's kind of a thing of love. There's always a chance, but uh, but yeah, I think that was the best way to go about it for me. Um, Obviously, it's probably not the best for everyone. It does require some upfront capital and some uncertainty about what you're going to get back, uh, but it ended up really good, and yeah, I'm very proud of the book, and it's kind of way different. When I tell people I wrote a book, they're thinking like some crypto or finance, and I'm like, no, it's a fiction book. It's a mystery thriller, and they're like, what? I didn't even know you were writing anything like that. So, uh, yeah, that's kind of I encourage someone's out there and just thinking like, it just seems like such a tall order. I hated writing originally. Now I like it. Um, I wasn't good at it, but we have a lot more. You have a lot more time in the world than you think. So if you spend a little time each day doing something, one, you're going to get good at it because things stack up, and two, you can accomplish a lot. So
Well said. Any advice for somebody who is just thinking about writing a book and they have to take that first step?
yeah, I like what I did at first, where I sat down that first night and wrote as much as I could, just to kind of get the start, and just so it's not like, oh well, there's only 3 or 10 pages. No, I already have a fifth of the book already written. I can do this. And then tell a few trusted people that you're writing a book, and you're going to get it done. And that's that. Because, if you just keep the promise with yourself, there's no one to hold you accountable. Versus you have a couple good, close people that you trust. They might ask about it from time to time, like, how's that book going? Are you any farther than that? When's it coming out? And it kind of gets you refocused and holds you accountable to doing it. So, it was getting the book out was very important to me from that standpoint. I think it was one of the few things that I had said I was going to do in my life, or said I was going to set out to do, and hadn't followed through on it yet. Um, and some of that was because it took a lot of time, but it really helped me when friends or family be like, "Hey, you're writing the book," I was like, to be like, "Yes, I'm going to get this done," because I told myself it, and I want to be accountable to that. So I guess those are 2 things I'd say.
Very cool, man. Well said. All right, Zachary, thanks very much. As we wrap up the show, where can people find you if they need to reach out to you?
Yeah, they can reach out to me on LinkedIn or my website for the business, my investment practice, Digital Edge, WM.com, Digital Edge Wealth Management. Or you can reach out to me from my book website, which is Zachary-Daniel.com. Either or social media. Yeah, just reach out whether you have a question about the book or the writing process, or anything crypto or finance related. I generally give unsolicited, as much advice as I can give, as not your investment advisor, because I want people to learn about the space and want to help people. And it's a tough space. There's a lot of misinformation. There's a lot of ways to kind of get hurt. So I want to do my best. Even if you're not gonna, I'm not gonna be your investment advisor. I'll help you out either way. So.
Thanks very much, Zachary. So I'll put those links in the show notes. And Zachary, thanks again. You are the first alligator wrestler I've ever had on the show. So I appreciate it, man.
Yeah. Thanks for having me, Gabe. It was great. It was great.
Awesome. Thanks. Have a great night.
Thanks. You too.